It's Friday, yay! And it's me, Buffy, here with the second episode of our April series, which is coming directly from the Capital Markets Trading Desk at Sunwest Mortgage Company. All right, let's get into it. Okay, so finally we wound up another busy and dramatic week. The market is assessing recession risk after the latest Federal Reserve meeting minutes, which revealed warning signs from inside the central bank. This obviously sent stocks lower, but for a very short duration. The minutes also showed officials considered a pause in monetary tightening to assess the effect of the banking crises earlier this year. It indicated talk about how the Fed opted for a quarter-point rise to tackle high inflation. Now, more than 70% of traders expect another 25 basis point raise at the Fed's next meeting in May. Traders on Wednesday also reacted to the latest U.S. Consumer Price Index report, which showed headline inflation cooled to 5% in March from 6% the previous month, even as underlying price pressures were elevated. Core inflation rose from 5.5% in February to 5.6% in March, which is in line with economists' expectations. The U.S. Treasury rallied following the inflation data decreased more than 1%. U.S. producer prices fell in March by the most since the start of the pandemic, driven by a decline in gasoline costs that have helped slow inflationary pressures. The producer price index for final demand decreased by 0.5% from a month earlier. The PPI slowed on an annual basis, rising 2.7% from a year ago, the smallest gain in more than 2 years. Applications for U.S. unemployment benefits initial jobless claims rose 11,000 to 239,000 in the week ending April 8th, largely due to a jump in California, suggesting more softening in the labor market. Continuing claims fell to 1.81 million in the week ending April 1st. U.S. equity futures traded mixed after the latest readings on jobs and producer price index and were slightly softer than expected. However, the Federal Reserve Bank of New York President John Williams added that March outlook of policymakers for one more interest rate hike this year, followed by a pause, is a reasonable starting place, though the path will depend on incoming economic data. Let me break down to you how the housing market is doing, okay? So the home purchase sentiment index rose 3.3 points, which is slightly higher than in November of last year. It is down 11.9 points compared to last month. Mortgage applications increased last week for the fifth time in 6 weeks. MBA mortgage applications index rose 5.3% in the week ending April 7th, after falling 4.1% in the prior week. Purchases are up 7.8% after falling 3.5% in the prior week. Refinances increased 0.1% after falling 5.4% in the prior week. The Federal Reserve rate decision and inflation data due next month continue to loom pressure points for the market that is being driven by central banks currently. That in turn is driving worry among investors that the Fed might over-tighten and tip the global economy into recession. Let's continue to learn about the market to figure this out, okay? So as always, please join me next week for more market updates. Stay updated with our news and our trading desk. We'll keep you informed with our pricing incentives. It's the weekend, everybody. Have a great one. Buffy, out.